We're really excited for you guys to spend some time with us today. We've done these webinars before, and while they are all equally exciting and informative, this one feels special. We're really excited to share our new account investing experience with you called Auto Investor Account. A lot of folks that are probably on this webinar right now had joined during the beta phase where we were calling it GF3 beta. So welcome. I'm looking at the panel here, still see some folks flooding in, but we are 3 minutes after the hour right now. So I think we're gonna go ahead and get started. So I'm really excited to be joined by Brian Daly and Chris Garrett here on the call. Brian's with me here in Atlanta, and Chris is out of our Lynchburg satellite office, I believe, Chris.
Yep.
So yeah, we've got a really good hour schedule with you guys. And so Chris, let's go ahead and just to the agenda, and I'll cue this up real quickly and then have Brian slide on in. So again, welcome to everybody. Thank you for scheduling the time here on a Friday as we look ahead to the weekend. Got a really good solid hour for you guys. Brian's going to go over some of the background on the history of the company and really what is ultimately leading us to where we are right now, which is the official launch of this new investing experience. And then Chris is going to come in and he's going to talk about the product itself and then tap into his actual own phone and give you a live demo. And then we're going to conclude the hour with a Q&A session. Many of you were kind enough to send some questions over to us in advance as part of the registration. So thank you for that. We've got a couple of those queued up here at the end. We've gone through, we've picked out the best of the best, or at least collated what were very common consolidations. And so we've got those that we can address. And then I'll be monitoring some of the questions here that come in a live environment off to the side. Any of you who's looking at the GoToWebinar control panel, you'll be able to see a question drop down. So please use that. And time permitting, we'll pull in a couple of those as well. So without further ado, we're ready to get started. I'm going to slide over here and introduce Brian Daly. Brian.
All right, let's get underway. My name is Brian Daly. I am co-founder and CEO of Groundfloor. Some of you are already familiar with us. Some of you may be new to Groundfloor. Maybe learned about how to earn passive income using our new auto investment tool and app, and are here to find out more about what it is and who we are. So let's start there. We're an investment technology platform and an asset manager that provides capital to build, redevelop, and rent out residential real estate. We've been at this 10 years now. Started the company in 2013. In the wake of the 2012 Jobs Act, which is part of the story about why we're all here. We're all here because individual investors are rising up to invest in alternative assets at a greater rate than ever before. It's an incredibly popular trend. It's been building as we've been building the company. We were very early to the trend, and we learned early on from our customers that among all of the alternatives to public market investing, real estate is widely regarded as the most appealing. And that's for some important reasons that I'll get to in just a minute. We built the company into a $24 million annual revenue top line. That's based on last year's results in 2022. We currently have 82 employees. So we're well beyond the sort of startup phase, the early days in the proverbial garage. We're now what's known in the venture capital business as a growth stage company. And it's an exciting time. We've reached scale with 230,000 retail investors now registered for Groundfloor. Those investors on our platform have invested over $1 billion. We're incredibly proud of that milestone. And as large as it is, what's really humbling is how large it could be and how small that is relative to the opportunity. Out of those investors, over 7,000 of them have chosen to become shareholders in the company. So in addition to investing sort of with us and in the products that we offer via our mobile app and our website, 7,000 have invested over time to own shares in the company itself. And we're very proud to be 31% customer owned. We think that that is very important for our mission. That mission, if you give me the next slide, Chris. When we started the company, the mission then, as it is today, is to level the playing field in financial markets for people like you who are on this call. We know that the investing world is wide open with all kinds of choices. If you're a hedge fund or a private equity fund or a high net worth investor or someone who meets the SEC's test, the regulatory test to be an accredited, so-called accredited investor. We started the company because when the Jobs Act was enacted and signed into law in 2012, we foresaw that the crowd was coming to alternative investments. We thought that alternative investments could and should play a very important role in people's portfolios. And the exciting thing for us has been to see not only how individual investors have created wealth on our platform and earned returns that have averaged about 10% a year with extraordinary cash flow and low volatility and high predictability using these products. And that's the type of thing that draws people into private market investing. But it's also created a lot of opportunity for the real estate entrepreneurs who we fund with this capital by loaning the money or making equity investments as they raise capital to go build new houses, which is badly needed to meet the shortage in housing supply that's been very well documented in the media over the last 10 years. And to renovate aging housing stock, which is also another important way to create more entry-level housing or first-time homeowners homeownership in the United States. So that's the mission of the company. Chris, if you give me the next slide, I'll talk a little bit about this rise of alternative investing. It turns out the younger you are, the less likely you are to believe that public market stocks and bonds are the way to build wealth and save for your future. People are looking for above average returns, and that's why we've seen people turn to speculative investments such as meme stocks, cryptocurrencies, collectibles. Everyone who I think spends time considering where to place their investments and has the money to invest for the last 5 to 10 years have been on a hunt for alternatives to public markets. Bank of America predicts that this trend is only going to grow. Out of all of the alternatives, and I hesitate to call it an alternative because it's already so popular out in the market, we think real estate stands out as a great opportunity for the mass market of investors. Chris, if you give me the next slide. When you look at investing in real estate, people have talked about why that might be valuable. There are a lot of ways out there today to invest in real estate. I'll share a few that have been sort of the incumbent methods of getting exposure to real estate if you think that's a good idea. And the first one is rental property. If you have enough capital and the stomach for the work and the risk, it's possible to go out there. There are websites where you can buy rental properties, you can invest in them, you can borrow money typically so that you contribute some equity yourself and then borrow money from a bank or from another source of capital. If you own a rental property, the problems with rental properties, it can be a lot of work. And although prices have increased a lot, so people have made a lot of money on the appreciation of the property and rent growth has been strong, rental property over time isn't for a lot of people because of the amount of capital that's required, the time, and the expertise. So the market has really started to open up with another way to invest in real estate, which is private deals. So some of you may have heard of real estate crowdfunding. That's been a trend that has had a lot of ups and downs over the last 10 years. If you're an accredited investor in particular, you've always had access to private deals, and those might be private funds, like might be a a private equity fund that you invest in that does private deals in real estate. It might be to participate in as part of a syndication of a deal, like a commercial real estate deal, or maybe a package of houses or a portfolio of houses. If you participate in something like that, because you're an accredited investor, that's what it typically takes to get access to something like that. The check sizes usually start at about $25,000. So less capital than is probably required for rental property. It is a passive investment. That's great. But in order to participate, you have to qualify. And then even if you qualify, you have to concentrate a lot of capital in relatively few deals. So that's been a second way. Third way, Chris, if you give me the third bullet, that is an extremely popular way to invest is REITs. So we've all heard of REITs. It's a real estate investment trust. You can buy stock in a REIT on the New York Stock Exchange. There are over 164 publicly traded REITs in the United States alone, worth over about $1 trillion in market cap. Now, the issue with the REIT is the same issue that you're going to have with investing in any public stock. You're trusting the management team to make good investments. If it's a public REIT, you're taking equity market exposure because sometimes the market holds REITs in favor and sometimes the market doesn't. What usually draws people into REITs is the income potential, because REITs have to, by law, in order to qualify as a REIT, pay out 90% of their dividends in cash. And, that can usually be about a 4, 5, some cases 6%, annual return of capital on a REIT. So a lot of people like them because they're very accessible. You can get them on public markets. You get some income at about a 4 to 5%, 4, 5, 6% annual return. But the big risk with that is, you don't know what's going to happen with the price. Last year, for example, was a really bad year for REITs. There are also privately traded or privately held REITs that, if you have access to them, and there are some real estate investment platforms out there that offer access to these privately traded REITs, you really have to watch out, because those REITs, they can take risks that can make you more money or lose you more money. And they can also really control when you get to sell and when you can have your capital back. So, buyer beware on a lot of privately held REITs. What we're going to show you today is an important evolution in real estate investing. When when the market for indexing in public stocks sort of evolved in the 90s, we saw the introduction of ETFs, and ETFs, exchange traded funds, really opened up a lot of opportunity to buy very small fractions of a great number of stocks that maybe fit a certain strategy or a certain geography or a certain industry. And they've been very popular because they're very low cost. They're typically publicly traded. And this is the way that, if you have a financial advisor, this is the way that your financial advisor is probably allocating the public stock part of your portfolio. The question is, when and how is this going to happen for alternative investing? Because having a fractionalized portfolio of real estate investments or other alternatives is really sort of the best of all worlds. It's passive, it can be highly liquid, and it doesn't tie you up in the same way as a REIT does. And importantly, it doesn't charge you the exorbitant fees that most REITs do. So Chris is going to walk you through Groundfloor's take on what fractionalized portfolios to invest in real estate as an alternative looks like. We're going to be building on this for quite some time. We really see this as the future, not only for real estate investing, but for alternative investing in general. And we're really pleased that we've reached the point of market scale and adoption where it's possible to offer something like this and really lead the market in evolving in this direction. So with that, Chris, I'm going to turn it over to you so you can show off the auto investor account, show how it works, and then take questions. Thanks a lot.
Great. Thanks, Brian. So we've been working on this since January, and I'm really excited to be talking about it and kind of diving into it a little bit. Okay, so in a nutshell, what this product is, it's the ground floor easy button for investing in real estate. And so what we've learned over the last 10 years is we can get consistent 10% returns, steady cash flow. We don't have fees in our products. They're all backed by real estate and real assets. They're qualified, and it's in this case the minimum to get started is only $100. Brian, I like how he pointed out that the starting check size for some of the other investments he was talking about was $25,000 per deal. We traditionally, our previous accounts and LROs have been for $10, and we've dropped it down to $1. So very big difference in this kind of scale and the level that you can invest in. The key behind this product is that we've figured out a way to make it much easier to do these investments and to kind of automate the whole process. So we've been doing this for a while. We have an individual investor account that's not going anywhere because we know a lot of people want choice and they want the ability to pick and choose their investments. But we also know that some people want something that's a lot easier so they don't have to worry about all the work that's required. So I want to give a little difference between the two different accounts. So the auto investor account, pretty much you put money in and it does everything for you. So it's automatically diversifying as much as it can. If you're an individual investor, you have to figure out how you're going to diversify your account. The auto investor is really geared toward beginner or intermediate investors. The investor account is more toward intermediate to experienced investors. Now, I consider myself a pretty experienced investor, but I really love this, and you'll see it when I show you my account, when I demo it, that this is where I'm putting my money now because I love this account. The first repayment that you'll see with an auto investor account usually comes within the first month. We see some people getting repaid as early as a week after they put their money in. And if you're an individual investor, that's going to vary greatly depending on how many loans you've invested in and which ones you've chosen. Of course, they're both backed by real estate and qualified. And then one of the other differences is in order to get this kind of diversification with a small investment of $100, we lowered the minimum per loan down to $1. So $100 investment potentially could get you into 100 loans if that's what we have on our platform. Whereas with the individual account, the minimum is $10. So you have to put more money in to get that kind of diversification. And if you're, over time and you're investing in a lot of loans on both platforms, you should see returns, or historically we've seen returns over 10%, even including losses. We did an analysis of our investors, and basically we plotted, what were the returns that people got versus how many loans did they invest in. And you see on this chart, if you're below 50 loans, there's a lot of variability. People are kind of all over the place. Some people may have done really well. Some people lost money. But as you move to the right and you invest in more LROs, you get a narrower and narrower band of return, and it really hones in on this 10% consistent return. And you'll see in a moment when I demo my own account. So I've been using it since March, and my account has over 400 loans in it. So I'm way over on the right on this chart. I didn't have to do anything to do that. I just put money in, and it's naturally happening. So how does it work? So let's just say on the first week, this is all done automatically for you. You put money in, and this is what happens. So you show up in the first week. I'm going to show a simple, 4 loans per week just to make it easy. But you show up in your first week, you put some money into this investor account, and you get allocated into some loans. And maybe next week you show up, there's some new loans on the platform. It invests a little bit less. You just put less money in, so you're less in each LRO. Week 3, you do the same thing with a little bit less money. So now you've kind of have this unbalanced portfolio. But then let's say the next week you come in and you put in some more money. what happens is it starts, we call it a flood fill algorithm. It kind of fills up almost as though you're filling it up with water, and it evens it out so you're getting as evenly distributed across these LROs as possible. If you were to come in a week afterwards and put a bunch of money in, it would fill it all the way up. And if there's any closed loans like these ones on the left, those wouldn't get topped off, but the rest of your portfolio is going to get as diversified as possible as you put more money into the platform. When we have looked at this repayment curve, this is also based on historical data. What does it look like for people? What is the kind of peak that you get repaid on a loan? What is kind of the tail and stuff like that? So on average, the peak is somewhere around 7 months that you get a loan repaid. If you're in a lot of loans, this will average out over a lot of, and you'll get a nice smooth repayment curve. And that's what we're trying to create with this account. If you're only in a few loans or you're kind of being picky and choosy, you don't really know when you're gonna get your first repayment. But you have this repayment curve that takes some time to kick in. And what we're seeing already while we were in beta is that we have this repayment curve of people getting repaid. This is kind of let's say this is the historical curve. And what we've seen is it shifts way to the left. And people are getting repaid. They see their first repayment much earlier because they're investing in everything. And as a result, you're going to get lucky on a few of those, and you're going to get a repayment sometimes within a week. Usually you'll start getting a couple within a month, and it starts kicking into gear pretty soon. And I'll demo that in a moment too. Really easy to get started. You just need to download the app. It's on both Google and Apple app stores. Set up your account. If you're new to Groundfloor, you'll go through and it'll ask you for your personal information and stuff. If you already have a Groundfloor account, an investor account, you just log in, and then it'll give you an option to create this auto investor account. Then you link your bank account. If you have a Groundfloor account, you can use your existing bank account, and you make your first transfer, and that's it. And then the app pretty much does everything for you. All right, so let me switch to give you a demo. All right, so this is my account. I was in the beta in March when we first began internal testing. So this is a good demo because it'll give you an example of what does it look like after you've been on this platform for a while. So I'll just kind of give you a tour of what the functionality is. So transferring funds is pretty straightforward. If you do a one-time transfer, you have the option of transferring from your checking account, but also if you have other Groundfloor accounts, you can transfer from those. So if you have an investor account or a Stairs account, you can set that up and transfer that. And you can also set up a monthly recurring transfer. So I've got mine to set up to do $250 on the first of every month. And I'm going to go tap up on the little settings button on the top right too, and kind of explain what some of these features are. By default, the very first setting is that this sort of auto invest button. That's what you want on normally. The only time you would ever want to turn this off is if you've decided you want to pull everything off the platform, you don't want to be reinvesting. That's kind of your emergency escape hatch. The second option is for those of you who do have an investor account. I've turned this on. So I have an investor account. I've been a Groundfloor customer for a long time, long before I even was working here in the product team. So I've got an investor account, and I really like this product a lot. So I have this turned on, and the way it works is whenever I get an LRO repayment in my other investor account, it just automatically sweeps it and transfers it into this auto investor account. And I'll show you what that looks like in terms of transactions in a minute. So I love this feature. It's just kind of basically gradually moving my money as it gets repaid from my old investor account into my auto investor account. The third feature here is called the cash target. This is also something that you normally would want to leave at zero until you're ready to start taking money out of your account. So the idea with the cash target is if I were to set a cash target of $100, then the repayments would stop automatically reinvesting until I get that cash balance up to 100. And then once it's at 100, they'll start recycling again. So that lets me have some cash that I can withdraw. I can kind of wait for those repayments to happen. When it hits $100, I can pull that cash out. It would then again stop recycling and reinvesting until it hits the $100 cash target. I don't want that. I want to have my money fully invested, so I'm going to leave it at 0. So as I mentioned, I've got 403 loans right now in my account. So we have a chart that kind of shows the value over time. You can see when the internal beta first started, it was in March. I put my first money into this account, and I've been gradually transferring. I transferred my stairs money in here. I've been transferring my other investor account in here. So it's been growing over the last 7 months. So we have a little summary here. It shows you how much you have, how much interest you've earned, what your annualized return has been so far. If I go into my investments, I can see on a daily basis like what's being invested here, and you'll see the reason I wanted to show you that chart that showed how it works. As you see here, I've got a $44 investment, I've got a $20 investment, I've got a $12 investment. Just because it's evening out all of my investments and kind of filling in those gaps as it kind of floods my account with those new LROs. So those $44 investments are most likely ones that came onto the platform this week. I can, if I'm curious, I can dive in and actually see the project itself. So I can see details about it, learn more about what the project is. Of course, I'm in 400 of these. I'm investing in everything. So I'm not terribly interested in that because I know like I'm invested in everything. Some will win, some will lose. On average, I'm going to get a really good yield. And the other thing that's happening is, so the reason why I have this $349 investment is because something got repaid. So this was probably either came from a repayment or a couple of repayments that came from my investor account and got swept in, or I got some repayments on this from this auto investor account itself, and then they're just getting reinvested into new LROs. So let's take a look at repayments. So so far I've had $5,000 returned in capital, which is great. That's one of the things I love about this is it's a continual cash flow, and I've received $86 in interest. If we take a look at the repayments, these are grouped by month, so I can see all the repayments I've had so far. My engine has gotten up and running on this auto investor account, so I'm getting a lot of repayments and a lot of reinvestment every day. So it's really nice because I don't have to do anything, right? It's just it's super easy. And then the last thing is you can see what your transactions are. So we see that investment that I showed you earlier. I've got my repayments coming in, some transfers in. The transfer in would be the auto transfers that are coming from my investor account. And that's pretty much it. It's pretty straightforward. We're planning on adding some great new features to it. So we'll be continuing to improve it and enhancing it. So stay tuned for that. And I'll go back to my slides because we do have some frequently asked questions that we'll kind of walk through, and you're of course free to ask questions in the chat as well.
So, all right, first question, can I set strategy goals or customize my auto investor account? All right. We're seeing if we can share let's see what we can show.
There we are.
You see it?
Yep.
Cool. All right, so I'll repeat it because all right, can I set strategy goals or customize my auto investor account? So that was a lot of different sort of flavors of that question that had been asked in advance.
Yeah, and the answer is if you want to do any kind of like guiding your account toward different strategies or investing in different LROs or kind of customizing it in any way, that's really what our investor account is for. We are deliberately keeping this the simplest, easiest possible thing we can do, which is you put money in, you get money out. That's definitely an option in your investor account. And one thing I didn't mention is that if you are brand new to Groundfloor and you came in and you've signed up for Auto Investor and you're like, well, I do want to be able to set my strategy and customize it. That's great. That's an option too. You can go log into on the web, log in with your Groundfloor account, your new Auto Investor account, and there'll be an option there to create a regular investor account. And then you have a lot more control over how your investments get allocated.
All right.
Can I set the minimum maximum amount to invest per investment? Again, that's something that I would say if you want to do kind of fine tuning how you want to allocate investments, the way to do that is to set up an investor account. We do have ways. We have a auto invest feature there. We have some kind of investment wizards that help you get invested in LROs. But this is supposed to be the easy option. So we don't really have any options for kind of controlling how the algorithm works.
All right. Next one, is there a total limit that can be invested?
No, you can put as much money on as you like. your dollars are welcome here. No, there's no upper limit. And what I would say is if you want to transfer a large amount, what you may want to do is do it in chunks over several weeks or something like that, because that way on any given week there may be on average right now around 80 loans that are available. So if you want to kind of maximize diversification and you want to put a chunk of money in, you may want to spread that out over a few weeks to get into the new LROs as they become available.
Yeah, that's a good tip. All right, can you explain repayments or the payouts and how frequently can they be expected?
Yeah, so the repayments, so I showed those charts and stuff. You'll typically in the beginning, first month, you'll see a couple repayments come in, and then it starts ramping up pretty quickly. What I think is really exciting is when I look at kind of historically, what does a repayment curve look like for the average Groundfloor investor? The auto investor account is about a year ahead in terms of like once it's really ramped up. So you saw in my account, there's a whole bunch of repayments coming in. So that's been about 7 months. So I have this engine going in my auto investor account now that's just every week I'm getting lots of repayments. So you'll ramp up between that 1 month and 7 months. It kind of goes like this and then starts tapering off because you're recycling your capital as rapidly as you can.
This is one reason that we feel really strongly that the auto investor account is a better mousetrap than any REIT out there. Because when you invest, say you invest in a private REIT, the fund manager is determining when your capital is returned. And if you're investing in a public REIT, well, they don't return capital because you're really just buying secondary shares, just like a stock. So if you compare this to something like one of the world's largest private REITs, right? I guess it is the world's largest private REIT, like the Blackstone REIT, if you can access that, if you qualify, if your financial advisor sells it to you, not only do you pay ridiculous fees, for example, you pay 12.5% of any return over 5% in terms of appreciation on the Blackstone REIT. You pay a 3.5% upfront load. You pay a 2.5% annual fee. And after all of that, any money that's left over, is paid out to you as a dividend, call it 4.5% dividend, which is less than you would make on treasuries or even a high yield savings account today. So what are you really investing in? You're investing in something that doesn't ever have to return capital to you. because if you put in a redemption request to Blackstone's REIT, and this is the largest private equity firm and the largest real estate investment trust that's not publicly traded in the world, they get to decide whether they're going to redeem your shares or not. And if more people want redemptions than they decide they're going to process, they're not going to pay out your redemption. They're going to tell you to wait till next quarter. Well, the way that Auto Investor works is when Groundfloor is repaid on one of the underlying loans that we've made to a real estate entrepreneur, you're repaid. And then it's up to you. Do you want to pool up your cash using our cash target feature? Some people were asking in the questions, if you want to take income, how do you do that? Well, you transfer in money. Once your money's invested, then you set your cash target, and we won't reinvest. The software won't reinvest your money until you reach your cash target. So if you set $1,000 cash target, it'll pool up your money until you get to $1,000. You're free to withdraw it whenever you want. You can withdraw it every day. You know, you can get a repayment, withdraw it. You could do that, or you can let it pool up and take it off $100 at a time, or you can wait till it gets to 1,000. You choose. And that's the point. You know, in the public stock market, we all get to choose. We all have opportunity. We have a lot of control. That's not really true in alternatives, and it's a lie that in order to have diversification, you have to invest in a REIT. And that's what this account does. So that's, you know, you will receive repayments at you'll receive about 10 to 12 times the monthly cash flow with a portfolio of Groundfloor loans compared to what you get from even the best REIT in the world, 10 to 12 times on a monthly basis. So there's really no comparison. We think it's much better, a superior way, you know, to allocate into real estate.
Thanks, Brian. All right. So we have one more question that was pre-selected, and then we'll get into the ones that came through during this webinar. So is the Auto Investor account only available in the Groundfloor mobile app?
Yeah, so that's a good question. So our strategy with Auto Investor is to lead with mobile. So you will get a much better experience in the mobile app. And you'll see that coming too. As we improve the product, you'll see things show up on the mobile app that you may not see on the web. It's not only available on web though. So we wanted to make sure that there was, for those of you who do have multiple Groundfloor accounts, you can log in. You can see the Auto Investor account. You can see your regular investor account and any other Groundfloor accounts you may have. So it's available on web as well. And you can do basic things like transfer money in and out. You can check on your account and see how it's doing. But the target experience that we're going for here is on the mobile app.
Cool. All right. Thanks, Chris. All right. So we do have a couple questions. We're okay on time. We'll take a couple more minutes here and address the ones that you guys had submitted as the webinar has been unfolding. And so the first one, Chris, I think I'm going to put you on the spot here, which was a question that had come in. Someone was asking about two-factor or multi-factor authentication. Do you have any thoughts on that?
I sure do. That is being tested internally right now. And actually, you know, I would actually ask you to reach out, and we can add you to if you really want MFA, I'd be happy to give you early access to it, because we're testing it out. We're making sure it's one of those features that you really have to get right. We released an earlier version of it internally this year, and it really wasn't the experience we were looking for. So we went back to the drawing board and fixed a bunch of stuff. So we're now testing it internally. I'm using it on my own account. If you would like MFA and you'd like to be a early adopter, I'd love for you to reach out to me, or you can just, if you reach out to us, we'll get you on the MFA early access. I'd be happy to do that.
Yeah, to that point, I would say almost all of our communications, email communications, our website has an email address that you can contact us directly through our support line. And if that's something that you are interested in, to whomever asked that or anybody else on the webinar here, we'll make sure that that gets access. So obviously I was smirking. I queued that question up to Chris because I knew what the answer was. All right, Brian, I think this next one is for you. What does regulatory qualified mean?
So In the world of private investing, and you would put Groundfloor in that category because we're not publicly trading these securities on an exchange. In the world of private alternative investing, you really have two different categories of offerings. One is uses rules that are that require limiting the investments to those who meet the test, the accredited investor test. So you either have to be a fund that's a qualified fund, or you have to be an accredited investor. And if you do that, you know, about $2 trillion worth of capital is raised using these rules every year. That's kind of a wild west of private investing. A lot of times those investments are sourced through wealth managers or advisors. Most of what you hear about as real estate crowdfunding is offered via that path. The other path that we use is a path that allows us to qualify an offering as an issuer of securities. We use a set of rules that's known as Regulation A. You can Google that and learn about what that is. It's used to finance a lot of different things now. But what's important about it for you as an investor is that those rules require that we disclose what the investments are, what the returns might be, and what they've been historically, how we, you know, all the different risk factors around an investment. It also requires that we, and this is very important to a lot of people, that we file audited financials every year. And we've done that for 8 years. So we invested about $4 million of capital in about 4 years early in our life as a company to achieve qualification under Regulation A. And we work with the Securities and Exchange Commission week in and week out, month in and month out, to make sure that we're you know, living up to the requirements of the rules. They are constantly looking at our new offerings and the amendments to our offerings. And so there's a level of regulatory oversight. Now, it's important to say, and we're careful about this, the SEC doesn't like it when we use their name to imply that they've approved our investments or that they vouch for our investments. They're not in that business. They're in the business of making sure that any issuer that's using these rules to offer securities to everyone has met the standards of disclosure and is complying with the rules. So when we say that we are qualified under Regulation A, that means that we've done that, and that the Securities and Exchange Commission has gone through its process to verify that. So we've received a regulatory qualification. That's what it means.
Cool. Thanks, Brian. So a couple questions I'm going to maybe call an audible, and I
Sure.
guess either of you guys could jump in here. I'm going to sort of paraphrase because there's a couple of different questions that have come in. I think maybe we could revisit, or maybe the question here is to describe or explain how the products like LROs, notes, IRA, and labs in particular, and how that plays from a user's accessibility and experience between really what are now two dual coexisting account experiences.
Right. So I can clean that up a little bit since I've been here the longest, and it's more my fault than either of these guys. Here's the thing. When we started out as a company, we were operating at a low scale. I would say we were offering maybe 2 or 3 loans a month to invest in. It looked and felt like a real estate crowdfunding, you know, platform. And that's where we got our start in the early days before we had our regulatory qualification, and we could really only had enough, you know, customers or investors to fund a few very small loans. You'd go onto our website. God willing, there would be loans available to invest in. They would usually sell out pretty quickly. And the number one feature request was more loans, please. We worked really hard to deliver on that. And over time, we built up enough supply of investments where now on any given day, if you just go to our website and look at the Groundfloor 2.x, our second generation product, our you know, the product that we've been running with for 8 or 9 years now, you'll see there are, you know, somewhere between 60 to 80, sometimes 100 loans that are funding at any given time. And the great thing about that platform is you can pick and choose how you want to invest. You can invest $100 in one, you can invest $1,000 in another one, you can pick and choose what you want for geographies. You know, there's a lot of choice. In fact, there's probably too much choice. And so we created some tools. One is an automatic investment tool that allows you to decide how much you invest in each loan by grade. Another tool is our investment wizard that allows you to kind of filter loans and build your own portfolios. And this is great if you're an early adopter who wants to pick and choose loans and wants to sort of engage actively in the process. We think that everybody is going to want a more automated, you know, especially people that maybe aren't early adopters, and they want the yield, you know, they want the cash flow that these products deliver, but they don't want to do the work. And so that's the idea behind the auto investor account. Now, there are some other products that we've branched out into as a company. Some people have asked about Groundfloor Notes, for example. Groundfloor Notes is available on our website through our standard, you know, legacy investor account. And that's one of the investment options, right? You can go over to the Groundfloor Notes tab, and a Groundfloor Note is a subject for another webinar another day. But that's an example of another product, you know, that we built over time that's been very, very popular, you know, on our platform. We've also been tinkering with new products because there's a whole world of alternative retail, you know, real estate investments out there. And we are constantly looking for new opportunities, new categories of product that we can bring to market. And so we created Labs by Groundfloor for, you know, unfortunately, because it's so expensive to go through the regulatory qualification process, you know, we really limit, you know, the accessibility of those investments to a small segment of our user base, either accredited investors or people who meet other tests that are within the rules. But our goal in doing that is to as quickly as possible, you know, figure out which of those products really work and can scale and can be offered at the same level of scale as our notes product and our loans, right? Some of you have asked what's an LRO, because we use that term. That is a technical term that we use around Groundfloor sometimes. It stands for limited recourse obligation. That's the technical name of the security that is being invested in, or that you're investing in via the auto investor account, or if you go onto our site. And, you know, really the colloquial term that we use for that, that's less technical, is just, you know, and it's an investment, it's a security, or it's a loan that you're investing in. So hopefully that cleans it up a little bit.
I think so.
Gives everybody a little bit more context.
Yeah, a lot of options, but the questions were asked is the old platform, the old experience merging into the new? They're coexisting, and for very different reasons, right?
Yeah.
Sort of the customization, the individual strategy, and then this new auto investor where everything is automatically diversified. So we're really just a couple minutes now at the top of the hour, so I think we're going to wind down. Couple questions had come in about what's next with this, and as we always do, once we conclude this webinar, the system kind of processes the video, but we will share this video. So look for an email, either try to get it out today, try to get it out by end of the day once it's done processing. So for anybody that registered, and obviously all of you here who've attended, we'll look to send a follow-up email at the end of the day with access to not only the recording of this webinar, but also the video that we couldn't play again because the audio wasn't working. But any of that is also available on our YouTube channel as well. There was a question about how to get in touch with us. support@groundfloor.us is our global support email. So for any of those that are interested in being added to that two-factor or multi-factor authentication, as Chris had indicated, we'll get you added to that list. So just go ahead and email us, let them know that you were an attendee and you're interested in this, and we'll take care of that. And we'll follow up with you directly in that regard. And from there, again, just want to, on behalf of you guys, thank you so much. Chris, thanks for doing that live demo. I think that was particularly helpful for folks to really sort of see it live. There's a good blend of folks on this call who have the product right now, and then others that are really interested and curious about what that is. And so we hope that we've sort of answered a lot of the questions in that regard. And again, really appreciate your time. Look for the video follow-up so you guys can watch this or hone in on some specifics, and happy investing. Appreciate it.
Thanks, everyone.
Thanks, everyone.